tax laws. We used to have different acts. We have the corporate Company Income Tax Act, we have the Personal Income Tax Act, we have the Value Added Tax Act, different stamp duties acts and all of that. So we have quite a number of them. So what has happened is that instead of having those acts in different documents, we have all of those acts in different documents. So if you want to know what governs the people in the corporate space, you have to go to the CIT, that's the Corporate Income Tax Act. But instead of doing all of that, so what they have done is to try to overhaul and bring everything together. So what you are hearing outside is not as if they are entirely new. That's one thing that everyone should settle in their mind, so that when you're having conversation outside, you would be able to know, you'll be able to contribute and say that the tax laws, they are not outrightly new in themselves. However, what happened was just a overhaul and also trying to bring all the tax laws and the tax acts together into a single document. However, there are some new introductions. There are some of those provisions that they repealed. There are some that were introduced. So that is the basic introduction that we should know about it. The tax laws are not entirely new in themselves. Please, we can move to the next slide. Okay. So why is this conversation necessary? I already mentioned earlier, because there are lots of news. Why it is even important for us, even as believers, to know is that so that we don't argue ignorantly, so that we are not ignorant. Because when the whole introduction came, like, it led to a lot of uproar, especially on social media. You see things, a lot of misconceptions here and there are misinformation, and it has created fear in some people, in some of us, employees, even small-scale business owners, the investors and all of that. Unnecessary panic. News flying around when you're making transfer, put this narration, make sure you put narration, this and that, gifts, loan, you receive a transfer of 1 million naira and you put purchase of amala or something ridiculous, just to evade tax. But so that's why it is important to know what the NTA is and what it is not. So that's the NTA there is the Nigerian Tax Act. So why do we actually need the reform? I've mentioned it because earlier, because there were just a whole lot of them, about 500 existing laws and all of that. And another thing is because all of those laws, they were enacted like way back. There were some of those laws that are as old as 2001, 2000. Imagine the kind of laws they made that time, and it's still governing us. So there was need for that overhaul, then to consolidate. I've mentioned that. Then to help the administration also. Then the implementation timeline, as you are aware, it took effect January 1st, 2026. So some of them have taken effect. And the new governing body that govern the tax administration in Nigeria at federal level is now Nigerian Revenue Service. Before now, we usually hear FIRS, but they are now NRS, that's Nigerian Revenue Service. Next slide, please. Okay, so I mentioned that they actually combined a whole lot of those tax laws into documents. So now what we have now are 4 documents. That's the Nigerian Tax Act, the Nigerian Tax Administration Act. The Nigerian Tax Act is like a compendium of all the tax laws that governs Nigerian laws, Nigeria. Then the Tax Administration Act is that act that governs the administration, how it will be administered, how tax will be administered. So Nigerian Tax Act tells you what the law is. Administration Act tells you who should do what, how, when, and all of those administration guidelines. Then the Nigerian Revenue Service Act, what we have before was Federal Inland Revenue Service Establishment Act. But now, because they are now NRS, so they now have their act, then Joint Revenue Board and Tax Appeal Tribunal. So if you have tax disputes as a result of, because Nigeria, we operate self-assessment, and that's one thing why when I was seeing all of those news flying around that, oh, bank will start debiting you and all of that, it's actually funny because Nigeria, we operate tax assessment, self-assessment regime. Self-assessment regime in the sense that you as a taxpayer, you are expected to self-assess yourself. So when you self-assess yourself to know, to estimate, okay, this is how much I have earned, this is my income, and this, based on the tax law, this is how much I should pay. That is self-assessment. But tax disputes not arise as a result of different interpretation of tax laws. You know, it is law. So my own interpretation of a provision of the law might kind of be different from your own interpretation. However, it can also be different from the intention of that law by the lawmakers. So that is what gave rise to tax disputes. So in case of tax disputes and you are unable to resolve it and all of that, taxpayers have they are at liberty to approach the Tax Appeal Tribunal. That's like the court where tax matters are being settled. Next slide, please. So that's the act that govern that. Then the key highlights. So there are a lot of changes. However, that's why I said that they are not new in themselves, but there are some new introductions. There are some that have been taken out. There are some that have been updated. So some of them will be highlighting some of them. This list is not exhaustible. Please take note of that. So we have the simplified corporate tax structure. So before now, we have different kind of companies. We have the small company, what we call small company, medium company, and large company. So what distinguished them before was usually their was the revenue size. So if you're a small company, we are between 20 million to 50 million small, between 50 and 100 medium, then above 50 to between 50 and 100 medium, then above 100 you're a large company. And their tax rate, that's the tax rate that is applicable to each of those companies, are different before now. However, it has been changed, so we no longer have medium. So what we have now is small and large. And small company is company that has turnover between 0 and 100 million, and they have asset of 250 million. Not more than 250 million worth of assets. Then the beautiful thing is small companies, many people that even complaining, so to say, all these social media people that are actually complaining, they don't even have turnover above 100 million naira in a year. And the truth of the matter is, take it or leave it, the new tax law is going to favor more of the small businesses. It's going to favor more small businesses. So if you have turnover less than 100 million naira, you will not be paying tax. Your tax rate is 0%. So you will not be liable to CGT. There's nothing like development levy. So also we have development levy. Okay, before now we used to have different companies pay. We have to touch this briefly because of people that work in companies and probably the accountant and like that. So I'm just taking my time so that everybody have a brief idea of what we are talking about. So before now, corporate people, that's companies, they have to pay after their company income tax. They still have some other sub levies that they pay, like tertiary education tax, like their information technology levy, like NASENI, and all of those sub levies. But however, all of those things have been submerged to just one levy, which is development levy, and that is 4% of your assessable profit. Then CGT, and so capital gains tax is on your disposal of chargeable assets. Disposal of chargeable assets, not all disposal, and it is on gain. So if you dispose an asset and there is no gain on that disposal, there is no capital gains tax. However, the change now, before now, it's usually 10% on the gain, but now it has now been merged to say to the tax rate the company is liable to pay. So as an individual, whatever your tax rate is, that is what your CGT rate will be. So as company, it is no longer that flat rate of 10% now. It is now at your normal company income tax rate. So that's another change. Let's move on. Okay, personal income tax. Of course, this one affects almost everybody here as employees and individuals. So before now, we have what we call consolidated relief allowance, which is, so as employees, you wonder how that you agree an amount with your employer. They'll tell you, oh, how much is the salary? They'll tell you maybe 15 million naira per annum. That's like the gross. So it is important that we know that gross is different from net. What most employer will agree with you is usually gross. So you don't expect that much at the end of the month, because there are some deductions, the tax deduction and some other deduction, pension deduction, NHF, NHIS, and all of those deductions. So your income. Okay, another thing is this news of banks debiting. Okay, I've established that banks don't have the right. There is no provision in the tax law that gives bank rights to debit you for taxes, except for the statutory value-added tax and the stamp duty, that's electronic money transfer levy. Except for all of those ones, and those ones are not. They are not taxes on your income or whatever. They are not taxes on your transfers. They are charges. They are VAT, value-added tax on the fee of the bank. So please, let's correct that notion. Don't join them to start saying transfer or your transfer. They will start deducting tax or anything. Okay. So let's take note of that. So I was explaining consolidated relief allowance. So before your employer will calculate how much tax they will deduct from your money before they pay you, there are some kind of reliefs that the government give. So you don't pay tax on your entire amount. Before, we have consolidated relief allowance. But now that has been taken out to be replaced with rent relief. The rent relief is now capped at 500,000. So meaning it is 20% of your actual rent or 500,000, whichever is lower. Do we get that? So if your rent is, let's say, 2 million naira, you are doing 20% of that 2 million naira is how much? 400,000. So the rent relief you will enjoy is 400,000, not 500. So it is whichever is lower. So if it's above 500,000, you can't get more than 500,000 as your rent relief. So another thing you should know is that all of this tax law and all of this fusion in the environment outside saying, oh, tax is affecting everybody, this and that. If you're a low-income earners, okay, by low-income earners, I mean people whose annual income is less than 25 million naira, you will likely be paying lower tax than you've been paying before. It is only if your gross amount that you get at the end of the year is above 25 million naira. That is when there's probability of you paying higher taxes, because the whole idea is to tax the rich more than the poor. So if your your annual salary is less than 800,000, you are likely not going to pay any tax. Minimum, that's 800,000 yearly. So it is because they don't want to tax people that earn below the Nigerian minimum wage. So that's that. Then the CGT 2, CGT on loss of employment. So if there is payment on loss of employment, if it's above 50 million naira, you pay capital gains tax on that. Then there's a broader tax base. Resident, so that you work for a non-Nigerian company does not exempt you from Nigerian tax. Please, let's get that, yes, clearly. That you work for a non-resident company does not exempt you from Nigerian tax, because the tax rule of Nigeria is the residency, is your own residency. Where are you resident to carry on that activity? So even non-resident companies may be liable to tax in Nigeria, aside individuals. So let's know that. Next slide. I'm really running out of time. Okay, so this is just like a simulation of what used to be and what we have now. So before now, this is just an example. If your gross income, annual income is 15 million naira, based on the old law, because we have a new tax bracket. So the way personal income tax work is there's no static rate the way we have for companies. You know, companies, I said if you are a large company, it's 30% on your taxable income. That's another thing people should know. Taxable income is different from your total income. So what will be taxed is your taxable income, not your entire income. So the tax bracket before now was 300,000, first 300,000 as 7%, next 300,000 as 11%, next 500,000 as 15%, and like that. That's the tax bracket there that you have on the screen. So if you were earning 15,000 naira under the old regime, the tax you would pay at the end of the that's your monthly tax, will be 215,000 naira. Based on this simulation, let's say, you have contributions to NHF, you have contribution to pension. Mind you, pension contribution is statutory, so it's compulsory. So then interest on loan, I think I should mention this too. The rent relief that we are to enjoy now is only for people who are living in rented apartments. So if you are staying in owner-occupied apartments, you are not eligible. What you are only eligible for as a house owner, it would be probably interest on loan that you used to build the apartment. That's the only thing you will be liable to, but eligible to rather. So if you are not staying in rented apartments, you cannot enjoy it. So for you to be able to enjoy that relief, you need to be able to present your rent receipt to your employer. So let's move to the new. Okay, so let's take note of this one. The monthly payee is pay as you earn. That's the tax. Is 215,000, right? The same gross amount. Then the next slide. Next slide. Okay, new law now. So still the same amount, still the same deductions, but the tax you will pay now is now 207,000, meaning your take home will increase. So employees now, for this month, if your employer has effected NTA, the changes in the NTA, expect that your taxes should reduce, meaning your take home should increase. Though it may be marginal, but it should increase. Because the tax rate, because of the new tax bracket, see that the tax bracket, the first one there is first 800,000, and it's at what rate? 0%. So that's why I said if you are earning 800,000 and below, you are likely not going to pay any tax. The next one. I hope we got some level of comfort from that. Sorry? What do you say? Okay, so let's move on. Digital economy. So now, you know, the economy is tilting towards digital now. We want to go digital and all of that. So even government, they are trying to, they want to wise up to to ensure that we get all of the income into the tax bracket. So your digital assets, your crypto, or whatever digital asset you're trading, the income on it is now taxable. Please note. And okay, men of God, when you go out and you get honorarium, it is taxable. So please note that. Also, we used to have something called one house, please. We used to have something called pioneer status for some companies in some specific sectors of the economy. Before now, we have, so those companies that operate in some kind of sectors that are not really encouraged. Companies that people don't, sectors that people don't really normally invest. So governments give them that tax incentive to say, okay, for a period of 3 years, you won't pay any tax. And it can be extended to 5 years. But now that has been repealed, that has been replaced with the EDI. So there's nothing called pioneer status anymore. So what you have is now EDI. That's to replace the pioneer status. Then we have VAT. The VAT rate still remains 7.5%. However, you remember that I said small companies. Some companies are not liable to tax in Nigeria. So small companies, you are not even expected to charge tax. However, you are expected to register, but you are not expected to charge it. You are not paying VAT. So there is no VAT on their income. Then full input VAT recovery now on services. Before now, you can only claim input VAT on manufactured goods. Probably you get materials to produce. You can only claim input VAT on those goods. But now you can claim input VAT on both services and goods. Then e-invoicing. Of course, e-invoicing too is a new introduction into the tax law that everyone should be aware of. The next slide, please. Tax administration and the enforcement. So now, we have more stringent penalties for default. That is why it looks like, oh, everywhere is, everyone is scared. It is because all of those things, many of those things are not new, but because we have more stringent rules and penalties, so it is important that we are compliant. Please tell your employers they need to be compliant. The next slide. Okay, what businesses and individuals should do? What are you expected to do as an individual? Of course, you need to be informed. 2, you need to plan your taxes around, you need to plan your income and everything you do around taxes so that you know tax implication of everything you do. So you can also engage tax professionals for proper guidance. The next slide. Okay. There are lots of misconceptions. However, I actually added some of them here. The first thing is NTA introduced new taxes everywhere. That's not true. I've mentioned that small businesses are going to be worse off. That is not true. Then VAT has been increased. That is not true. In fact, there are lots of other additional services, goods and services that are now exempted from VAT. 0 rated. That means it is the VAT rate on them are going to be 0%. So there are a lot of them. Then everyone will pay more tax. That's not true. Have we confirmed that? Then pioneer status has been removed from without replacement. That's not true. Please, the next one. Employees will lose more of their salaries. That's not true. Only if you are HNI, that's high net worth individual. If you earn more than 25 million naira, expect to pay more tax. NTA is only about revenue generation anyway. It is not only about, it is about revenue generation, but not only about revenue generation. So what are the key takeaways? 1, NTA is not to punish us, especially because it is for us to generate more revenue for people to spend. So, and it is a modernization framework. It is an attempt to help us align with the global standards. If you check it truthfully, Nigerian tax rate is actually one of the lowest tax rates in the world. If you compare it, it's just that because we feel we are not seeing the dividends of those taxes, that's why we feel, oh, it is high. It is not as high as the taxes they pay outside the country. So misconceptions can undermine its benefits. Please get your facts right and be clear on them before you discuss or before you publicize anything. Thank you and God bless you. Please let the offering basket for Sunday school go round. Please let's collect our Sunday school offering. Let's collect our Sunday school offering.
Hallelujah. Please, can we all be on our feet? As we'll be taking the hymn, praise the Lord. Praise the Lord.